This is rebasing downwards. And, you know, there's no better game in town than your benchmark gold, apart from possibly silver, some miners, and a very rare selection of things. Other assets that have all been put into bubbles. Gold is not the bubble. Tech stocks, property, cars, which are not really assets, but they're kind of current assets, other things, Persian rugs, vintage cars, wines, art, which is money laundering as far as I'm concerned. Those things are rebasing downwards. Physical metals are only starting to get the respect. This is just triggering on what will then have a capitulation downside move associated with it. Yes, nothing is straight lines, but for a target right down, I'd shock you if I gave you the full numbers of it. Gold ounces are king right now as your benchmark for monetary valuation.
How many ounces of gold would that be to the NASDAQ?
So currently at 4.6. At the recent localized high peak NVIDIA, it was 8.97. So you've already shed more than a half. And I can take you right back to .com era years to give you the ultimate number. And that was over 17. That was 17.78. My suspicion is you're going to find yourself, I need a log scale this, you're going to find yourself far, far lower, potentially 2s, and then later even below 1.
According to Francis Hunt, we're facing an unprecedented fiat and debt debasement crisis across the entire Western hegemony. The dollar is breaking an 18-year trend, gold isn't a bubble, fiat is collapsing. Tech stocks and Bitcoin are plummeting against gold. This mathematical certainty requires urgent positioning in precious metals. Thanks for watching. Give a thumbs up and subscribe to Find Metals for the latest insights.
Here's where we're at. This is part of the story. Gold wins here. Bank of America saying gold's a bubble, silver's a bubble, is absolutely propaganda framing. It's an Overton window that fails to recognize that we are in a scaled fiat and debt debasement period that will run and run and run until you've had the equivalence of bank failures, you've had debt markdowns, haircuts, all forms of embarrassing events that America never thought would befall them, probably some martial law, some social unrest. And in terms of inflation for Americans, the idea is actually to make imports too expensive. This is part of rebalancing these record deficits. You must buy less foreign stuff, because your cost of living is going to go up, you're not going to be able to afford it. And this is how they'll rebalance away from being the once hegemon with the Triffin's dilemma and the exorbitant privilege of exporting paper to somebody who no longer can export paper, fiat, treasuries to the same degree. People should remember there's a macro. There's a difference between leverage trading short term and investing for the macro. And so time frames, you behave differently on leverage. A lot of other things apply. But if we just go to the investment hypothesis in gold, our primary macro view is more upside for gold. So people will say, but hold on a minute, Francis, we had this big ass sell-off, you know, we were at 5,600 and then bang, we got this rejection. And of course, it closed lower as well. It was a red candle. It was one of the first in a while. And at one point, you're as low as that. So technical analysis, macro technical analysis is our forte. It's one of our unique USPs. That would be typically called a shooting star. And it is a bearish candle on a weekly time frame. So let me just clarify, we're looking at gold, we're on the dollar, we're on the weekly time frame, and that qualified as a shooting star. Now there's only one way you negate a real shooting star, and that's where you deliver the exact corollary to the same degree of volatility candle. So what is the corollary or the countervailing force of a shooting star? Well, it allows for the ongoing downside initially. So you closed here, you opened here, and you traded immensely down on that wick. So that is still the impact of the shooting star. However, if you're to negate it, what you need is a similar scaled reversal. So here was the upside reversal, and there is your downside reversal, go past your open and close the week higher up on the week with a green body. So what you've actually got here, and we called this after 2 days. Many people saying, but how can you say that on the weekly candle? The weekly candle wasn't even finished yet. And our goal is to be early. You can't say anything about the future with any great confidence, but our expectation, given the volatility and the rebound, at that time, this was a slightly red candle, and it was roughly here. But it had a big hammering wick on it that already highlighted quite a high element of rejection up to here. In the end, at the end of the week, it had gone all the way up to there. So we turned out lucky or accurate for forecasting that. And it is a negation of the volatility reversal to the upside to have an equal, similar, and proportionate volatile rejection of the lows to a similar degree. Remember, this is supposed to be your digital gold. That is, money go up because Fed, cause sovereignty, cause liberty, cause your digital gold that'll go up when the dollar goes down. I'm very, very sorry to report it is not serving as digital gold. It is not the fastest, cheapest, most scalable solution. It's not serving or winning in any of its arenas at all. It's not digital gold. It quite clearly isn't. Have physical gold as your original gold. It's not the fastest. It's not the cheapest for transferring money. As a result, and it's quite clearly got auspicious roots, as we've always suspected, from How to Create a Mint, the paper in 1996. Since 2016, we said, don't get involved in this because you trust in it and because you think there weren't nefarious actors. There's always been this Satoshi Nakamoto, I call him the imaginary Japanese friend narrative, which feels like a complete construct. And for those that say, well, what does a bear flag mean and so what? It's just technical analysis. It doesn't work on crypto. I often get, all of this splaining that happens. Here was your bear flag. Here we called it in the previous bear market as well, and that target too was also made to the downside. So there's some pretty nasty targets to the downside. Bitcoin is not looking particularly good. And if I were to give you a target for the bear flag, I think you were asking around that. So to answer your question, let's just put those levels back in and on there. You can see that I have a number of flags. We do targeting off a number of assumptions, but you can see there's a 51 and there's even the potential for a 36 to the downside. So 51 and 36. And on a lower time frame, I think you've got yourself a possibility that you might even have a structure here that is not overly helpful as well. Again, people might be tempted to say that looks like a head and shoulders type structure over here. The final thing that you should always do when talking about Bitcoin, as I've done for copper, the NASDAQ and everything else, is say, how's it performing relative to gold? And as I mentioned to you, you can't even begin to see the degree of re-rating because it's re-rating against the dollar currently. It's absolutely re-rating against gold. And again, we do the monthly time frame. This is a rollover. And by the way, the log scale is a bit deceptive in this sense because it came from near zero. So it looks like a lot. In percentage moves, this was a lot. But if you just do it like that, this is a succession of ever more struggling to make higher highs. This is a very important chart that we've drawn. We've highlighted the $100 level in the blue line here. Since 2008 lows, this has been in a climbing channel. So we have actually called the dollar long. We're not just haters on America. Some people sometimes think we're not. We love the American people. We always got on very well with them. They're great people. Sadly, what's gone on as a hegemon and the people that have been looking after their money haven't always been the best kind of people. But, we called this long on that target that came out of this upside HVF, for example, some time ago before. But more recently, the news has been bearish. And you can see the support the 100 was. It kind of kept these lows at bay. It kept those lows at bay. It kept those lows at bay. Then you broke the 100. And I'm going to zoom in this more recent history. This was just to show people that you've actually had an 18-year trend that is in a state of breaking down. A state of breaking down. Let's get rid of that Fibonacci there for a second. And you've now broken below the 100. And we've been entrapped in this sort of squeeze box of this ascending 200 period. And you can see the support, the 100 was. It kind of kept these lows at bay. It kept those lows at bay. Then you broke the 100. And I'm going to zoom in this more recent history. This was just to show people that you've actually had an 18-year trend that is in a state of breaking down. A state of breaking down. Let's get rid of that Fibonacci there for a second. And you've now broken below the 100. And we've been entrapped in this sort of squeeze box of this rebasing ascending grind line and the 100 level, and we've been rejected after running 100 both times, and now we've broken that to the downside. We're on the monthly time frame, by the way, just to remind everybody. We're on a monthly time frame. And here's my concern for the dollar generally. You've got to remember record deficits against Euroland and China. These are real problems. And nobody, the Triffin's dilemma, a quick explanation fundamentally while we're getting the chart ready. When you're the hegemon, this applied for Britain prior. So as I say, please don't see me as beating up on America or Americans. When you were the hegemon, you export debt and your currency in lieu of excess received goods. So you typically get more imports than you have exports. Those other countries are not buying enough American items, China, Europe, but they are selling a lot more BMWs, Mercedes-Benz, or Chinese goods into Walmart, etc., than you are buying of their stuff. That deficit is being recycled into paper, and the paper is debt instruments and in your currency denominations. This is a massive falling wedge. What are we looking at? We're looking at the copper continuous future that was on a monthly divided by gold. So yes, copper is up. You saw the chart, all-time high in dollar. But what does that mean in the new original, the old money standard of gold, which is now the new one again? We've gone the full circle and we've gone, you know what? Gold ounces are the way to measure your wealth. Well, in that sense, we are seeing a debasement of all assets to gold, with the possible exceptions of miners, silver, platinum, and very, very few things. And here you have a consistent grinding out of copper. So are you better served being long copper than gold? Right here, right now, I'm saying no. Your new benchmark is the harshest benchmark, and you are in debasement times. You're just using the wrong basis of account, and they are playing monkey money games with you, showing you this depreciating fiat and saying your house is still worth the same, you're doing great. Or you must pay us capital gains tax for making money on your house because you made more than what you bought it for. But that unit of account from 2-3 years ago is not even the same unit of account. In gold ounces, your property is rebasing downwards. Everything is rebasing downwards. And here's a chart you really liked. It's rebasing downwards. We actually have an upside break on oil that we expect for the first time. We've been relatively quite bearish. Oil, we've highlighted that it's going to underperform generally the monetary metals. But let me just show you an interesting fact. We've got a technical setup for it. Your guys can have a trade if they like on it, if they like the setup. There it is right there. This is on the hourly, and I would use our HVF method, which is a unique bespoke methodology that we use to trade. And I would say, there you go. You've got a trade coming for you in oil. We can see 69, that probably means a technical run back above 70. But then go and that's a bullish trade for now, but go and see how oil has generally done against our friend gold, our harsh, stern master of fiscal discipline, and you will see that it's a totally different story. I'll put it out on the monthly, and you can see it, that in actual fact, the oil has been rebasing downwards. We expected debt to be in trouble as an asset class, even if originated by other nations. And we started looking at the likes of the Japanese currency right through here. And we were looking at this low volatility period and saying this breaks to the upside. And we were generating huge targets. A lot of those have already been formed. This is debasement of debt, because you've got to understand, as the yield goes higher, the value of the old debt issued at a much lower yield. These are contracts that are issued at a certain time for 10 years, for 20 years, I will pay you this. Their value drops, because if you can take new debt issued by Japan and be paid 3.7%, what is your asset that you're only receiving 0.75% for your $1 million, your $10 million worth? Well, it's not worth 10 million anymore, because you can just go buy the latest one and get nigh on 4 times the yield. So the price, the net present value, is the function of what yield it pays. And if this ends up going higher still, then you're sitting in a real problem. And as I've continued to say, and I'll repeat one more time, that this is specifically a fiat and debt debasement contagion, and it is beyond the scale of any before it. So this is not me seeking to be uber black-pilled or dramatic in any essence. This is beyond the scale because we have a synchronized entire Western hegemony, and even China, as many of the dollar maximalists have pointed out, does have excess debts and problem in its property markets too. So debt and fiat debasement is a thing. So physical monetary metals are absolutely central and key to any one capital preservational. But I also fear the change that is going to be brought about is going to be violent. The disorderly nature is going to become contagion-esque, and it's probably going to be masked with other socio-economic and geopolitical events